Vanke is one of the largest remaining property developers in China and one of the few names that is yet to default on its debt, even as the property market has been in a state of collapse since 2021. While bigger names such as Country Garden and Evergrande have already gone down, Vanke has been one of the more resilient names, that is, right up until yesterday. There was panic selling in Vanke's bonds yesterday. The company has $4.9 billion of debt that needs to be repaid this year. And despite repeated assurances from the company that everything is fine, we find out today that Vanke's CEO, this guy, Zhu Jiusheng, was just arrested and taken away by police. What's up, guys? I'm Nobody Special, and this morning we got this one in Bloomberg. China Vanke may be assumed by authorities, Observer says. China Vanke's top executive was taken away by police, and the Chinese property giant may be assumed by state authorities, the Economic Observer reported, citing unidentified sources. A task force sent by the local government of Shenzhen, where the state-backed developer is based, has stepped in to run the company, according to the report. The Observer reported separately that Vanke Chief Executive Officer Zhu Jiusheng was taken by police. Now, Vanke is something of a unique case because this company has been unusually resilient versus some of its other competitors. While a lot of other companies such as Sunac, Evergrande, and Country Garden have all flopped amid this crisis, Vanke has managed to stay alive, partially because this company is part owned by the Chinese government. And it's that implicit government backing that's held back some of the panic selling in the bond market, at least right up until yesterday anyway. Now, this story didn't all just pop up out of the blue. There's actually been a lot of events leading up to this since the beginning of December. Take this article in Bloomberg from December 6th. China Vanke sales slump worsens after debt cracks show up. China Vanke's sales slump worsened in November, adding to concern over its worsening finances during a prolonged property crisis. Contracted sales for November declined 34.4% from a year earlier to 20.1 billion yuan, or about $2.8 billion. Widening from a 22.8% drop in October, corporate filings show. And as you can see from this chart from Bloomberg, sales at Vanke have been struggling for quite a while now, down double-digit percentages for more than a year. And it's not like the Chinese government didn't see this one coming either. Take this one from December 18th. Chinese regulator asks insurers to report Vanke debt holdings. This is the Chinese government worried that Vanke is about to default on their debt, and so they're trying to take inventory, find out what firms out there have exposure to this debt, who's going to lose money, and how much. In other words, by mid-December, China was wondering how big would a bailout of Vanke have to be. And then yesterday, January 15th, everything came to a head in the bond market. We got this one in Bloomberg yesterday. Vanke's bond sell-off signals growing worries about debt payments. China Vanke, long considered a bellwether of the country's property market, is facing a deepening bond sell-off as worries grow about its mountain of debt coming due and a property crisis that remains entrenched despite government rescue efforts. Vanke's 3.15% dollar note due in 2025 was down 18.5 cents, trading at just 57.7 cents on the dollar, and that's so far this week as of Thursday in Hong Kong, and is poised for its largest weekly drop since its issuance, according to Bloomberg compiled data. Trading was halted on 5 of Vanke's yuan bonds on Thursday after prices on each of those fell by 20%. Now, while there's been no shortage of bad news for Vanke over the last few months, it's still unclear what triggered that massive sell-off yesterday specifically, but Vanke was very quick to come out and try to calm down their investors. China Vanke has no plans to extend bonds amid market slump, Red reports. Red reported on Thursday that China Vanke briefed investors on the matter after online rumors that it was considering bond extensions. The property developer, however, did not clarify whether it had prepared funds to repay debt maturing this quarter, Red reported. Now, as Red and Reuters are alluding to here, it's very important to focus not just on what's being said, but more specifically, what is not being said. Vanke is saying we have no plans to extend the maturity on our bonds, and bond investors are saying, oh, that's good, so you'll pay us back. You are going to pay us back, right? And while we never got clarity on that specific question when they hauled this guy off in handcuffs, I'm pretty sure we got the answer. It just wasn't the answer people were really looking for. And I'd imagine in the halls of justice in China, there was a lot of deliberation. Maybe one guy said, hey, why don't we launch an investigation into this company? Why don't we dig into their documents and look at their books, make sure no fraud was being done? And if so, maybe we could charge a guy and then hold a trial. And if guilty, send him to jail. Or maybe we just
grab him and take him.
What can I say? Communists do things differently. Till next time, live small and dream big.